Good afternoon, everyone, and welcome to the first LAI Phoenix chapter meeting for 2022. I am Amy Koblenz of AmeriCapital, and I have been financing commercial real estate for 35 years.
Yes, I mean, I'll follow.
I'd like to take a moment to thank our sponsor, Michael Klein of Freedom Financial Funds. That's a tongue twister for me. Thank you so much, Michael. We appreciate your support of LAI and your sponsorship.
Well, it's my pleasure. Thank you. It's a great organization, and we are proud to support interesting and very thoughtful programs like this. So, thank you.
Thank you. As we get ready to listen to and learn from our speaker today, I want to remind you that you can post questions in the chat box, but we may be able to answer your questions if you raise your hand as well. I'd like to introduce Greg Vogel. If you don't know him, you should. He's the founder and CEO of Land Advisors Organization. Greg founded the company in 1987, and as its CEO, he has led the expansion of the company into 23 markets across the United States over the past 30 years. His level of expertise in the areas of land economics, land use, and market trends have made him a trusted advisor to financial institutions, investors, home builders, and master plan community developers with an extreme level of expertise in large-scale community development and the representation of large landowners in unique structured transactions. Mr. Vogel focuses his philanthropy and civic involvement on Arizona State University, where he is a trustee of the ASU Foundation, a board member for the ASU Realty Company and ASU Enterprises, and a member of the ASU Real Estate Council. Greg is also a past trustee and governor for the Urban Land Institute and past chair of the ULI Community Development Council. Currently, he sits on the ULI Foundation Board of Directors. Ladies and gentlemen, Greg Vogel.
Amateur, I had to unmute. Let me share my screen. Thank you, Amy, very much.
Join the meeting.
Appreciate the opportunity to present to you all. I'll work to share my screen here and hopefully it will come up. There we go. So I need to apologize in advance if anyone was on the Valley Partnership, I'm sorry, the GPEC meeting this morning. I'm not a full repeat, but if you were on that call, you'll see a few familiar slides. I'd like to surely make this interactive at all. So Amy, if people could raise their hand or anything people want to interrupt, we'll leave plenty of time for Q&A. So I've got a 20-minute or so, 25-minute presentation. I hope to not bore you. This is our fourth quarter. This is very fresh. I have not quite reviewed it entirely yet, so it's subject to some grammatical errors or other things. This just got to me last night, so I'll do the best I can to step through it. Amy had mentioned, slides aren't advancing, hold on. There we go. So had mentioned our expansion. We're actually just opened our 27th market now in Nashville. So we're excited to have that addition, really vibrant market, obviously. You could see our footprint here in the light blue and the dots, and the gray is where we're yet to expand to. So we only have a few more flags to raise. We've got 72 advisors across the US, and collectively we closed on, just rang the bell, $4.4 billion last year of land transactions, which is a big record for us. We have a couple other entities. Land Advisors Capital, it's now headquartered out of Austin. We have a group of 7 people in that team, and we're funding lot banking, land banking, and all the other sources of equity and debt required to keep the wheels of progress going for the residential side of things primarily. Build to rent has become very active, as you all know. And then Carter Froelich, I think many of you may know, we formed a joint venture a couple of years ago called Launch Development Finance Advisors together, and that is every acronym of CFD here locally, but PIDS, TIDS, MUDs, and everything else related to district financing. So we're advising clients across the country. We also rang the bell for Phoenix MSA last year. We crossed the line of 5 million people, which is pretty exciting in terms of scope and scale of our community and the additional resources that it will bring. As we look to this decade we're in right now, we do expect that we'll grow by 100,000 people annually, or add 1 million new residents. Over the next 20 years, we'll need something in the order of 680,000 houses, welcoming our 1,900,000 new residents. As we look to it, we believe that's going to occupy several 100,000 acres of land. And the vast majority of that, or the majority of that, will be in the West Valley for all the reasons you all know, related to availability of land, transportation, and now especially jobs. So that's a big deal. We'll cover that a little bit more as we roll. East Valley is very constrained, as you all know, so much of it dependent upon the state land department and what they do with Superstition Vistas after the first transaction with D.R. Horton and Brookfield. But the Southeast Valley is really bumping up against geographic confines that includes state land, but also includes Native American lands, and is really pushing off, as we know, all the way to Florence again, which of course is Pinal County. Pinal will come on strong again. Maricopa has come back very strong. Casa Grande actually has quality jobs now, so we're seeing a tremendous amount of activity there. So we'll continue to see growth to our south. We'll talk about water a little bit. I'm sure everybody will have questions about that. It is truly constraining how we're growing as of this and next year, based upon what our Department of Water Resources is doing, and quite frankly, not doing. So we're wedged right now between 19 and 20 government estimates. We grew by 106,000 people, puts us right between Houston and Dallas, obviously much larger in total size, those two MSAs, which makes us, again, a very high percentage growth, much higher than both Dallas and Houston. So you could see the Smile states, again, continuing to be blessed with the growth. You know, we're rated as very strong by John Burns. We use all of Burns's research, and Phoenix went from very strong to strong, and that is purely the reason being affordability now. So our attainability, affordability is starting to affect his own indexes. We could talk about that more. Population growth more specifically, I think the important thing to look at here, you know, is our growth in total, again, above 100,000 people. The makeup, though, of that growth, this blue stack is the natural growth. And we hit a peak of 41,000 back in 2006-07 was the peak of natural growth, births over deaths. And we saw that steadily decline and then hover in and around 20,000. And then you could see, you know, the COVID dip. So this is truly very impactful to our natural growth. We are projecting that natural growth will resume, and likely this year it will begin to resume. We should be back in that order of 20,000+ in the coming couple of 3 years, we would guess. So that's a big factor, but it's being made up for by very heavy net in-migration. If you could imagine our current net in-migration hitting on top of what was our peak growth, we would be, you know, 150,000 or so in population growth. Our job growth has come back very strong, one of the strongest in the nation. So we have clawed back at the COVID dip. Of course, the one area that is still semi-injured here is still leisure hospitality, but we are seeing the hiring back, and Phoenix is one of the best job markets in the country. So this comes out of the Cromford report. I think the thing to focus on is the months of supply here of homes for sale. And when we look at what it was 3 times that 2 years ago, you could see how constrained our supply has been over this past year, under a month of overall supply. The other really disturbing thing is a house 2 years ago on the median price was $290,000. And as of this past week, we are across the line of $430,000, and it is startling. And so when we look to the supply illustrated here from where we were back 5-6 years ago, we went from 62 days of supply for homes under 400,000 down to 8 days. The overall market is down to 19 days of supply, which we don't see that ending soon. We have no way of building our way out of this right now for a whole variety of reasons we could talk about. The other is, again, this 430,000 median house price. We used to hover just either side of the US, and we were doing that for the better part of a decade. And now all of a sudden we're rocking upward to what I believe can get to less sustainable territory. So we've seen house prices really improve, but to a point that is quite disturbing. With that growth in house price, we calculated $240 billion of housing equity that's been handed to everybody here in the Phoenix metro area, which is also startling in terms of that home equity, and house price up year over year, 25%. So again, with this house price appreciation, huge equity in existing homes, room for move-up housing for sure. Foreclosures aren't a thing and can't be and won't be. The HELOC kind of home equity cash outs and the pervasive mortgage problems we had are not present today. So we will see foreclosures not even a factor. But on the other bookend of that is attainability is going to become more difficult almost no matter where you try to buy a home in the Phoenix metro area. Fortunately, household income has rocked also way upward from 65,000, it was hovering around, to this now 80,000. And with that kind of earnings, you could afford a mortgage of $1,990, which is right around our median price new home right now. So we are still quite attainable or affordable. And you can see the percentage of household income that would go to a mortgage here with a 10 or 20% down payment. So we're not in unsustainable territory, but one more year like this could put the writing on the wall. And you could see what is required. This is a little bit off. I don't want to talk. Yeah. So, $80,000 is what we're currently earning in terms of household income, but this is now dated in terms of stack. It requires virtually all of that income now. So we're going to start to get into that territory of where other markets, you're not making enough in the median income to buy the median priced home. But still, we're sitting in a situation where more than 50% of the people earning the median income can afford the median priced home. So that is good. Look what happened to Boise. It was at 60% 4 years ago. It has crashed to 21% can afford. So, and you look to Los Angeles, or one of our main feeders, only 8.5% of the people earning the median income can afford the median priced home. So that's tight. Don't need to belabor this. This is just building per median and resale. This will be up around 30,000. This is new homes. So a lot of transactions between the two. The other startling thing is you could see resale homes selling for $230 a square foot now, where new homes are $186. The big gap between the two of these, they're selling identically now. It's just that this is at 1,800 feet versus 2,200 feet for a new home. So obviously much of the building is going on the edges. So the median price of a resale home is more proximate. Another thing that is rocked is rents, wildly so. And so we have had rents far outstrip median household income growth. At the very same time, this rocking up of rents is causing across America, quite frankly, they all haven't seen this kind of appreciation in rents. But the main thing I would point to is that this past quarter or two, the new home builder can't pay as much as the build to rent party could. So American Homes for Rent, one of our bigger REITs that is headquartered here, had a long call with them the past month, but it's just math. And right now, these REITs that are now building, and those are they're building for them, can actually pay more for a finished lot than a for sale builder can. There's purportedly $60 billion that was allocated to the build to rent space across the US, $60 billion. If that's leveraged to what might be considered the norm, that's $150 billion that wants to be invested. About 20 billion has been invested so far. Well, that 150 billion sounds startling. Divide that by 300,000, it's 500,000 houses. That's startling also, maybe just to anybody listening. But take that 500,000 houses now and population adjust it and growth adjust it for Phoenix. I'll take 6%. Phoenix is only 2 and some change percent of the population, but let's triple it. 6% of 500,000 is 30,000 houses built to rent. We've got 14,000 of those cute boxes that have been recently completed, this cottage building. In any case, we need 30,000 of them yesterday. We need 60,000 of them. If we built 150,000 excess homes, single family and build to rent houses, it still would not be enough to straighten out our shortage. So we've got room to grow. The house price percentage that's being delivered in each of these price points here, this used to be the majority. So everything that is here now, this 35 or even getting up to nearly 50% of the housing between 350 and 450, that used to be between 250 and 350. So we're just seeing it all move up the dial. Same on the resale side, and that's more startling because so much of it was between 225 and 300, and now it's really moved up the dial. Fortunately, FHA has moved up our loan limit. So we're at 441 now. So they've adjusted those for this rapid increase in prices we've had. So FHA is still available to that median price. Permits, both single and multi, you could see the trend we've been on, and multifamily making up a bigger part of the stack is projected next year. And this year, we just couldn't get enough built, 13,000, 14,000 multi. Again, we need 50,000, 100,000 apartments. We needed them yesterday. We can't live with these increases in rents. It's just unsustainable. But now we're seeing multifamily sites that we are selling. Let's say 4 years ago, that was $6 to $8 a foot. It's now somewhere between $18 and $23 a square foot just for dirt. So we've seen, while construction costs have increased wildly, rents have provided for a allowance to allow to pay that much for dirt today for your typical garden apartment. Your typical build to rent, the 12 to the acre horizontal apartments, again, very common to see $15 a square foot right now. That does provide a yield. Again, we may see some disruption as interest rates rise and cap rates move up. We'll see some compression somewhere, but right now we need everything we're building and then some. Top builders, we've got Count Shea, 945, but we got the top 10 at or near 1,000 or above. But look at D.R. Horton, 3,200 permits last year. It's unbelievable. And what you need to do to acquire land for that kind of run rate, and each of these builders that you, as you look at them, the way they acquire land dramatically changes above 700 units a year. And we got 15 or so that are doing that. So they're buying larger parcels. They're joining together to take down really big tracts that they were not doing 3 or 4 years ago. We had to beg them to take 120 lots. And now that's just, that's a layup today. So growth in terms of where this population is settling and where permits are going, you could see the West Valley's rise. You see that plateau. That's not because it wants to do that. It's because we're out of lots and we're running thin on infrastructure. And we're really getting to the point both in Pinal County and the West Valley where we need big infrastructure, sewer plant investment, big water treatment campuses, spine roads, interchanges, and all that big infrastructure is required. East Valley's motoring along, but running out of infill. So we're really more infrastructure constrained than we are demand constrained. The large master plan communities, no secret as to why they are where they are in the West Valley, because of the larger platforms of land that can be acquired for what would be considered a master plan. Eastmark is getting toward build out. Cadence is sold out to the home builders that will build out in the coming 2 years. Spurcross is done, Meridian's done. So all those projects labeled in the Southeast Valley are pretty much done. A couple new ones coming on, like Brookfield and D.R. Horton on that adjacent state land to Eastmark. But when you look around the horn here, you could just see the vast majority of the big projects are West Valley, and that theme will continue. We'll see some Pinal projects probably come on to come out as a top master plan community. And we'll see again, a couple more far Southeast Valley. I'm going to go through a couple of these a little quicker. It's just boring. So I won't bore you. This is important here. This is the 392 active stores, subdivisions where you see flags flying across the valley. You could see the concentrations of where those are occurring. And all of these in the Southeast Valley are irreplaceable. There is just no land, but a couple of farm families have left and they're not selling still, but these will all disappear and there's not a place to replace. So they're all moving further south and east, and quite frankly, all the way to Florence again. So this growth is pushing further south and east. That transportation plan that has been approved and still somewhat contested in Pinal County still doesn't raise enough money, but they definitely need north-south highway here, because this is going to get more and more frustrating for traffic. All of Levine is under construction, and the last few pieces remaining. This will all be built out in the coming 5 years. There will be no more new subdivisions in Levine. Lots of multifamily going on in here. Southwest Phoenix is about built out, except for a few spots in Avondale, and especially where Brookfield has their big community here. The 101, none of these dots can really be replaced on the single family side. This will disappear. Peoria, North Peoria sold out until you get into the Vistancia area. So we're just seeing much of this migrate to the west. The 303, very tight on land, except for 4 major holders. The LDS Church with their Prasada project, the Maricopa Water District, and Verado. Between those 3 owners, you have about 80% of the remaining land in the 303 corridor, and then that's it. So we're moving up Grand Avenue, we're moving out the Sun Valley Parkway. Everybody's read about Howard Hughes Corporation and their big bet they placed here on Douglas Ranch and Trillium, and that project should kick off with construction starting in the coming couple of quarters. But you have a lot of room to expand out here in terms of land, but you don't have infrastructure. It requires those big platforms. When you look down to the Buckeye area, about to boom. We've lined up 15 builders here, but limited infrastructure. Estrella just sold at the end of the year. Harvard Investments with Toll Brothers, we paired along with Varde Partners. They bought 18,000 acres here. They're working on putting thousands of lots on the ground, not incremental neighborhood development, but they're looking at putting 2,000 to 3,000 lots physically on the ground, which will really transform that. And the demand is there. Then you get to Maricopa, it is lit again. It's expanding now south of the Action. And then Casa Grande with viable jobs, Lucid. We represented now 6 of the 8 major suppliers to TSMC. I should have mentioned that up here. But many of them are migrating down here. Many are migrating to Casa Grande. Many other jobs being announced in Casa Grande, which I think is a good thing for that market. The startling part now, take those 392 subdivisions, use the current absorption, which isn't even fair because the home builders are not wanting to, in a sense, release or sell homes they can't build or sell homes they don't know what it's going to cost to build. So with limited sales, take that same velocity, there's going to be 248 of those 392 subdivisions that will be built out and will need replacement. And that's without growing permit count, which I expect we would do if we can. So it's a very difficult market for the builders, the acquisition people pulling their hair out, a very difficult assignment. And the numbers they need to underwrite to now with these $400,000 house prices, that's what you need to underwrite to, $380,000 in Buckeye south of the freeway to pay for the land and the infrastructure. One other point is the cost to put a finished lot on the ground. 5 years ago, $900 a front foot, or take a 50-foot wide lot, $45,000 would be a pretty good number to budget for your on and off-site improvements for your typical neighborhood subdivision. Today, that number is $1,700. If you're in normal conditions, $1,800-ish. If you're building in some of the terrain like North Peoria or other areas that have more difficult situations, you're above $1,900 to $2,100 a front foot just to improve the lot. That puts you at $100,000 for a lot. That's without paying for the land, which is now up to $40,000 to $70,000 a paper lot. So you do the math, you're really looking at house price of $400,000 to $500,000 as to where the vast majority of the builders are going to need to build to. This is a little bit, well, it's lambda alpha, so this, you guys could digest this. So this is a pretty good graph that shows the permits and the growth in single family permits up to 31,300 last year. The home builders in the existing subdivisions, not all land they own, but the existing subdivisions they're selling out of right now, have only 12,800 lots. This is a ridiculous relationship or spread between the two. Therefore, the builders went on a spending spree and they bought 33,000 primarily raw lots, platted and engineered and raw lots primarily, 33,000 to try to play catch up, but it's still not enough. And then you see the, so I got all of them, yeah, the 12,000 existing and then the lot buys and then the permit. So we're really out of whack here, causing the need for more finished lots on the ground. Active adult had typically made up 10% of our volume across all the time I've been in the business, decades. We haven't kept to that formula, but back here where we were down 11, 12,000 total permits being issued. Now we're at 31,000 permits and you can see it's only 7% of the market. I still think this is COVID related. I do believe that if we had a normal run from 19, we'd probably be at 3,000. And I do expect active adult to pick up quite a bit. Active adult communities, though, they're not only competing among each other, there's a huge amount of competition in resale. So when you think about all of the Sun Cities and Trilogies and everything, there's such a volume of housing in those projects that it is accounting for maybe some of the demand. This is quite startling. This nearly $8 billion is the total land transaction volume in the Valley this past year. 8 billion. And you could see the hockey stick from 3 to 8. Really amazing over a couple of year period. Home builders made up 2.5 billion of that volume. There's been a huge amount of industrial land. It used to be 4% of our land volume. I don't have the exact number for you right now, but it has probably gotten to 20% or something of that nature. So industrial has come on very, very strong. I won't bore you with these details here, but I think importantly, look at the land volume and this step up from 2020 to 20. Now, keep in mind, 600 billion of that is Howard Hughes in one purchase. Keep in mind, there were other very large deals done. Estrella was 212 million. So there were some pretty chunky sales, but I think we're falsely being accelerated by the amount of industrial land. I shouldn't say falsely, there's demand for that product, but you can see where we've been and where we hovered around for many years. If you went back to 2008, it was 400 million in total land volume in our Valley, 400 million to 8 billion. I would also tell you though, if you were here in 2005, it was 10 billion traded in 2005. And 3 years later, it dropped by 96%. So to say land is cyclical, it's an understatement. Where we can grow, all of this violet color on the edges is what was once deemed as a pretty picture, a cartoon of a master plan community, or the real ones like Verado, as you could see, in Estrella here. This is all of Sun Valley. This is Douglas Ranch that Howard Hughes bought. So we have a lot of room and land to grow in the West Valley. Obviously, Pinal, huge supply of land. And then you could see what little is left in the Southeast Valley, except for this huge Superstition Vistas. So at any rate, that's where we get to grow too. And that's the end of my presentation for this part. I'll just go back to the map and however you want to roll, Amy.
Well, we do have a couple of questions in the chat, so let me go back there. Let's see. Scott is asking that his understanding is that the state is sitting on significant funds for infrastructure investment. Do you know how that gets distributed to municipalities and to address the lack of the significant water and sewer infrastructure?
Not much. So obviously, we all hope everybody's getting behind the new transportation plan for Maricopa County to extend our sales tax. That's vital and important. That'll get the SR 30 built. which is vital. It'll get the extension of the 303 built. Maybe some opponents would say too much in there for light rail. A lot of other surface streets widened. We see I-17 also being widened further. I used to joke that's so the governor could get more easily to his house at Forest Highlands, but at any rate, we do have lots of need for roadways. This West Valley got screwed over the decades, but the money that was coming to the state it's a drop in the bucket. It's not resolving or going directly, let's say, to Buckeye to expand their water campuses here that they need. They need 2 more water campuses. They're about 80 million apiece, and they're financially constrained. They borrowed up at WIFA, the Water Infrastructure Finance Authority. We have another sewer plant that's being planned to expand by 1 million gallons, but that's developer sponsored. By the way, that sewer plant that used to cost $20 a gallon is now near $40 a gallon.
Wow.
So we've just seen everything double. So to do a water campus and a sewer plant, 1 million gallon sewer plant, and call it a sufficient supply of water treatment, depending on treatment required, could be $100 million. That's just to get started. That doesn't put a lot on the ground, nor extension of main lines and parkways and things like that. So we really are in a situation where we are infrastructure constrained. The other area of deep investment the governor announced was $1 billion for water. And again, that's a drop in the bucket, pun intended. The idea that we need billions for water and how we're going to resolve it. But more importantly, related to water and water infrastructure, is the fact that we have the Department of Water Resources really holding us up right now. While west of the White Tanks, there's 100,000 acres out here that is programmed for 300,000 homes and 1 million people. There's now 25,000 people, 30,000 people living west of the White Tanks. We're 3% there. This area had proved up in the early 2000s to be able to support 1 million people. And DWR is saying, wait, it's overdrawn. It's because all of these projects, these plans, if you added them all up and you included no recharge and no conservation, no importing or wheeling water, but they're saying we're overdrawn today. And we are not letting you, Pulte, who's been building out here for 15 years, get to your next plat because we're overdrawn. There is more water out here than you can imagine, but we're being held up by government, by Department of Water Resources in Pinal County also. So we can't even get to the next subdivision while house prices go up 25%. And I'm going to start to label a big part of this ongoing problem to government, unable to process enough plats because they're so backed up, and Water Resources saying, not so fast, this area is overdrawn. I mean, it's getting to be a state emergency related to infrastructure, but of the kind that we already have that they won't let us use. Anyway, sorry to get on a
No, that's all important information. I think that answered a lot of questions too. I'm being asked if your presentation will be available to LAI members.
Yeah, anybody but any of the land brokers in your, no, I'm joking.
Okay.
It's available to everybody. Of course.
Okay, wonderful. We'll get that to all members. Which municipalities are most supportive and least supportive of the development and entitlements? That's a good question, Michael.
Yeah, it's a great question. I would tell you that it's a mixed bag as to how you define supportive. And if supportive means we want growth, we want jobs here, we want to, we really want it. And Buckeye would be, Jackie Meck, just the previous mayor, was the biggest cheerleader in the world. I've known him for 35 years, used to be the Buckeye Irrigation District's, manager for decades. He became mayor twice. He was the cheerleader. However, behind the cheerleader, it was a great front stage, but the backstage is very difficult. They're still on a 4-day work week. They would argue that they're working, 6 days, but because of the pressures, but they don't have staff to process. They have infrastructure needs to be approved, and they just can't make decisions quick enough. So Buckeye would be, I would say, rank us with the highest interested in growth and jobs are coming to them now, but they can't process. I would say virtually every city is quite welcoming growth. Queen Creek used to be on the border of, we're going to keep our agrarian roots and we're not going to allow developers to, in a sense, do what they've done in Mesa, but that's really opened up, fully. So, Mesa, what's left of it, they're very pro-growth. Scottsdale has, no land, and therefore their negative growth council now doesn't mean as much. Again, it means a lot for infill and going high, mid-rise or anything like that. It's difficult. But Surprise, again, welcoming growth, but in their infinite wisdom, not allowing for community facility district financing to handle the big projects that they have going up the 60 that have big infrastructure needs or out in Western Surprise. So they're welcoming growth. They're just not allowing all the tools to be available. I can't think of one community, though, that is saying we've had enough, we don't want any more. It's just more to the processing. The hiring is ridiculous. I mean, they're stealing from each other, and then the engineers are stealing from them. So it's just it's very difficult to get things done. I would say I've gone to Buckeye more than once. I've gone to Goodyear, and I've said, let's get the bulge out of the snake here, and why don't we do some self-certification of plats for the meantime? And when you're processing one plat after another in a large-scale community, they know the drill. They don't need to get behind the build-to-rent guy or behind the guy who's processing a tiny subdivision. Let them ride forward, unclog the pipes, and let's get to even flow, and then get back to business as usual. But no one's listening.
Greg, I have a couple other questions. One is, this is a little bit tongue in cheek, but it's sort of serious. Where's the Land Advisors municipal consulting wing that can help fill some of these gaps? Because really, they're going to need to go to a model that incorporates private sector, filling that gap. They all have the same problem, and it's not just an issue in Arizona; it's entire Western United States.
It's the entire United States, I would tell you. I mean, literally every market we are in is facing the same conditions, not 8 days of supply under 400,000 or, but there's very few markets with more than 30 days supply. America is full now. We're not building on a speculative binge of empty boxes. We need everything we can get. And government is not prepared to process timely, and it's creating a further problem. And then we get to the longer term issues I already mentioned, like water, that we could easily unclog that pipe tomorrow afternoon by getting Bashatsky to stamp some things to go forward while we create the long-term plans. But yeah, thank you. We should start somehow a lobbying business, but nobody's listened anyway.
So the next question really gets to, actually, I thought of another one too, but I'm going to start with the first one I had. Power. I've noticed that APS, I feel, is a pretty good economic development partner in the West Valley. At some point, we need to build more power generation capacity to fill some of those gaps. Palo Verde was originally permitted, I think, for 9 reactors total. They built 3. God knows if we're ever going to get another nuke plant approved in the United States. But where do you see the power issue coming? And are we going to need to be able to help APS just like we're having to try to figure out how to help water and sewer?
They seem to be on pace to keep up with what we're doing now. Keep in mind, we're still growing boxes at a fairly modest pace compared to where we were in the boom time. Palo Verde was 5 reactors, actually. They built 3. And everything I hear, they'll never build 2 more. But we should, and we probably could. There is tens of thousands of acres that is under option for solar and battery. So however that all comes to bear, I mean, APS has announced that they plan to be carbon neutral here by 2040. And if you can imagine the amount of land that is required for wind and solar, it's immense, and so there's lots of proposals coming on for solar, but that needs to be backed up with battery because we still need to have our AC on at night. So there's a lot of investment in battery too. I don't know if that makes it all happen. I think we're better than other states like California and Texas related to power and our infrastructure. I'm not an expert there, but right now I've not heard anything but go from both APS and SRP.
Okay. And so the last question, unless somebody else has one and they're not butting in on me, So talking about industrial, I mean, our understanding and talking to a number of industrial developers is the onshoring of not just manufacturing capacity, but also just inventory management is going to lead to a demand of an additional 1 billion square feet of a big box over the next not too distant future. I mean, are you able to kind of corroborate that, and where do you think that goes? And I think I know the answer, but we
Well, I don't know about the
that, and I'm
billion.
not sure
I haven't
that
seen the billion figure. If again, we looked at that figure as being real for the, that's like for the US or globally, do you
right.
recall?
That's for the US additional
Yeah.
demand, getting
So-
away from just-in-time inventory management to actually onshoring stuff.
Yeah, and so if I said, again, we look at population adjusted, we're at 5 million, we got 300 million plus people, we're under 2% of the population, but let's triple it, take 6% of that, we need 60 million square feet in our valley. Well, we absorbed 22 million square feet last year of industrial. Unbelievable. I mean, 6
Crazy.
used to be a pretty good number. And so we only built, I think, 11, maybe it got up to 13 by year end, but we built, and so industrial vacancies are low virtually everywhere, including California. So they have like no vacancy at the end. And so it's pushing a lot of things here for all the right reasons. So we know the binge of buying that went on. We had sold a tremendous amount of land around the Goodyear Airport, just south of the airport and north of the airport. But up and down the 303, there had been, 150 billion, $250 million spent on industrial land last year in the West Valley. When you equate that to square footage that could be housed, we could go a long way to housing on just what was bought, that 30 million feet, maybe get to 60 million feet, just with what's been bought. So it's the 303 corridor, as we know, is all afire, but that really stops about here where we get into Prasada and there's no more big box going on up above. I don't expect big boxes, although BNSF is up here now. Everybody probably read about this week. We did an assemblage many years ago for their switching yard here on about 700 acres. Well, they're at the State Land Department right now for 3,500 acres of land that'll go to auction here in the coming short period of time, next month or two. And that's for a huge intermodal facility. So that's pretty big stuff, but I don't see the 60 as being the big box territory. So what's happened is out in Buckeye, a lot of activity here, and the rush that just occurred in the past 6 months out here, it's unbelievable. Everybody is lined up along Highway 85 here, still without water and sewer facilities readily apparent in terms of solutions, although there's a little bit, but this is where Core Battery is going. Funco just landed on some land we had sold to LGE Creation. We sold land to Scannell, that became Five Below's, 800,000, these bomber boxes of 500,000, 800,000, 1 million feet are just occurring regularly. But this is the pocket along I-10. Buckeye's just filed a city-sponsored general plan amendment to bring a couple thousand of new industrial acres along their Highway 85. And quite frankly, they're going to continue that theme west, right out along the freeway. So this should be a very big area for it, but for the inability to get the simple things that life needs of, water, wastewater. So that's going to be the big constraint. Goodyear and the 303 can handle quite a bit of demand for some time. Industrial land in Goodyear now, you can't find it for $8 a foot. So you're out to Buckeye now, we're opening escrows at $4 a square foot. That was only $1 a year ago, 2 years ago.
Yep.
Wow. Any other questions? I don't see anyone else. Well, Greg, that was so informative. That was just wonderful. I feel like we took a whole tour of the area, and I really appreciate you being with us today
Thank you,
and
Amy.
giving us
Thank you
all of that information, and for kicking off our year as our first speaker. So your insight is just incredible, and I'll look forward to perusing the slides when we get them again, because that was a lot. I took tons of notes as you were speaking, so I'm glad
I
you're
saw
sending.
you jotting.
I'm glad
thank
you're
you.
sending them over, because that was a great presentation. I appreciate it. Thank you so much.
Yes, everybody enjoy the rest of the day and Happy New Year.
Thanks, you too.
Thanks, Greg.
If everyone else will mark your calendars for February 17th for our next LAI presentation, where we will be doing a capital markets update. And then March 17th, we'll be covering Prop 400. And in April, we'll be doing an event with the Mayo expansion and High Street that will also end at High Street for happy hour. So that'll be an afternoon event. Next month will be virtual, and then we're hoping to get back in person again. Other than that, I wish you all a wonderful day, a wonderful week, and thank you so much for attending.
Thank you.
Bye-bye.